Hey guys, how are you awesome lads doing on this great red day? Hope you all had a great weekend. I most certainly needed it. First of all, thank you to everyone who showed up and watching this morning's video. The reception was great and I am super excited about where we are going. It was the introductory video, so obviously nothing mind-blowing yet, but that will change as we start diving deeper into the matter each video. Also, on yesterday's video I asked for some feedback regarding what you guys thought about my macroeconomics approach to the markets and everything related to GameStop and AMC, and the feedback was 100% in support of how I am carrying out the channel. I just wanted to make sure that my content and the way I am approaching topics is hitting the right spot with my audience, which it is. Thank you all for being part of the Simulate and Trade channel. I owe you guys everything. Let's now talk about today. We have some pretty important developments coming from AMC and even the media, who were caught making up lies and trying to set a disingenuous narrative, which we will put on blast today. Furthermore, I want to talk about how the stock market is experiencing slow-motion deterioration, which has finally begun to be covered even by media outlets which a month ago were singing praises about how the stock market was at the best spot it has ever been. It's all fabricated narratives full of lies only to be met with a reality check. I'm going to lay it all out for you guys here on this video, but before we begin, let me quickly state that I am not a financial advisor, and that all content discussed in this channel is simply information gathered that I deem important for people to know, so that they can make informed decisions. All efforts are aimed to better understand the nature of the current market in anticipation of the greatest squeeze in financial history. Let's get started. Let's begin with the biggest news of all. AMC announced that they would be hosting their first ever NFT with Sony Pictures earlier in the morning today, and the anticipation of it was overwhelming. AMC's online ticket traffic was soaring to the point where the website was freezing and it even crashed. CEO Adam Aron took to Twitter to announce that this was the highest traffic AMC has ever experienced in its entire history. So much for the media telling me theaters were dead. Box office analysts were already very optimistic about the latest Spider-Man film, estimating that it would top $100 million during its December debut, but looking at the way people rushed to the AMC website has made them rethink their estimations. The high demand for tickets is very encouraging for investors and businesses like AMC and Sony alike. Paul Dergarabedian, senior media analyst at Comscore, said that it would be entirely fitting that a Spider-Man movie could potentially be the first pandemic-era release to break the $100 million opening weekend mark. He added that it should come as no surprise that pre-release online ticket sales for No Way Home are breaking the internet as excited fans clamor to be the first in the virtual line to grab their tickets for the film. I have to agree with Paul on everything he said. I have not seen this kind of fervor since 2019 when advance tickets went on sale for Avengers Endgame. The box office has simply not experienced this king of rush by moviegoers to snag seats since the pandemic began. I cannot wait to see what the box office for this movie will be, and how much it will help AMC beat expectations again for their next quarterly earnings report. This is super bullish for everyone involved, so be sure to make the most out of the current bearish performance by AMC, because chances are this will not last forever. In fact, United States giant pension, California State Teachers Retirement System has reported that they have added even more shares of AMC. This California teacher retirement system bought an extra 133,512 shares of the popular movie stock to end this quarter with a total holding of 689,917 shares. I am always telling you that big pensions and institutions are slowly and quietly racking up shares left and right, and that only retail is the ones experiencing a bit of uncertainty about the future of this company. Again, do not sleep on AMC because when this monster wakes up, it will only choose violence. I know we just recently had the last AMC Quarterly Earnings report, but I cannot wait to see what the next one is going to report. The numbers Spider-Man alone will bring at the box office will be insane, and the profits generated through investor and customer service programs as well as on food and beverage is going to be astronomical. AMC to the moon and beyond. Funny enough, the media could not hold themselves back from having to try to ruin the party by placing misleading headlines on an interview they had with Adam Aron. While Adam Aron talked about the surge of customers crashing the AMC website as everyone attempted to secure the movie NFT in a movie seat, some loser decided to make the headline appear as if Adam Aron said he was not worried about buyers who received error messages after purchasing NFTs, once again trying to establish the narrative as if the man is saying he doesn't care about his customers. Do you guys see why we cannot fanboy over any media outlet or media personality? We have to stay zen 100% towards everything and everyone that goes on the news, regardless of what they say. These institutions are trying to spread FUD so that their owners can either buy cheaper or not get screwed too much if they have an open short position. I want to talk about the stock market in general now. Over the past couple of months, stocks have continued to grow, indexes have hit new records, and yet consumers around the world continue to ponder how can the stock market be so isolated from everything going on. The pandemic's impact on consumer behavior, rising labor and material costs that have pushed prices higher have led even the best analysts scratching their head as to what exactly is going on. However, a closer look into the stock market will easily show cracks in the system, and now strategists are starting to panic. You see, for months, most stocks have declined more frequently than they have advanced, which is a sign of a weakening market condition. It sort of sets the premise that the strength by which the stock market has achieved its glorious all-time high might be coming to an end. As equity markets reach new highs, the divergence in the advanced decline line suggests we may be coming up to an abrupt stop. Guggenheim Global Chief Investment Officer Scott Minerd said that in the past, such divergence has indicated that the market is becoming more vulnerable to experiencing a massive sell-off. Taking a closer look at the S&P 500 showed that 15% of the stocks are more than 20% below the 52-week highs, with a large swath of mid-cap and small caps being down 20% or more as well. For those that might be new to the stock market, mid and small cap stocks that are less tech-focused are more susceptible to an economic slowdown. If enough of these start falling off, they will drag the tech sector down with them. We also know that the pandemic has weakened many sectors, and that their reopenings have had an onset of big challenges in operational costs. Some of the sectors that come immediately to mind are retail and industrial. Economist at Barclays Blarina Urici made a recent note to her clients stating that this phase of the pandemic will pose downside risks to the economic recovery, in which inflation components will be more sensitive to the disruption in services demand. In China, a big decline in sales due to pandemic issues has been taking place, and it is dramatically affecting luxury retailers, many of which are based in Europe. We have talked about this previously before on this channel as well. Supply chain and labor problems are affecting the ability of homebuilders to fully deliver on their projects and many orders, something we covered deeply in our morning housing market videos. Now we have serious concerns about controls on drug prices from the Biden administration, which have impacted Big Pharma. Though I am glad the current administration is tackling on Big Pharma, we also have to acknowledge the impact it will have on the market depending on the types of regulation and new policies that might be created. With all these things happening, the divergence between Wall Street and their precious stock market and reality is further growing, and the more it grows, the bigger the crash will be. What analysts and experts are questioning now is what exactly is going to happen to the stock market. It is experiencing serious weakness, but will that mean that doom nears and a big sell-off is around the corner, or does it mean further divergence and continuous growth for the short term? With news of a new variant spreading across the globe, we could definitely see some serious breaks on the stock market in coming months, or we could see them magically leap again as the Fed will ensure policy to allocate funds to better help Wall Street out. Last thing I want to briefly update you guys is that Finviz showed GameStop as having a float short of 113%. Keep in mind that short does not account for ETF shorts or swap exposures. It only accounts for the minimal short interest, which, being that it's at 113%, is a massive eye-opener. Shorters think this is a game, and they are going to get a rude awakening once the bear starts roaring. Let's now talk about today. The Fed submitted over $1.459 trillion in reverse repo operations today. Dark pool trades for AMC accounted for 60% of the total volume today, while dark pool trades for GameStop accounted for 47% of the total volume today. AMC had a larger amount of buy orders than its sell orders, with GameStop presumably also having a larger amount of buy orders than sell orders. Now, let's talk about performance. AMC traded bearishly today, losing over 2% for the day. It began trading pretty bullishly during the pre-market hours, reaching 38.48 at one point. This great performance would not carry over during normal trading hours, however. Upon market opening, AMC dropped from 38.40 to 35.92, which was disheartening and obvious of shorter manipulation. AMC would then bounce back, eventually breaking the VWAP, but would be unable to consolidate above it at 37. As such, it once again dipped and had a small surge at the end of the day, closing at 36.84, below the VWAP. As for tomorrow, AMC will find support at 36.30, 35.50 and 35 if shorters get cute. Resistance will be met at 37.25, 37.50 and 38.48. AMC is not looking good as of today. If by Wednesday we are not above 39, we will be breaking that 36 support wall and possibly reach 34. Buyers will rejoice at the great opportunity to buy tendies for cheap, but I know some of you will get frustrated with this, so please find peace in knowing the daily doesn't matter outside of the opportunity to buy more. GameStop traded bullishly, gaining over 1% for the day. Upon market opening, GME went from 204 to almost 208. After a second attempt at breaking past 208, GameStop was hit with an attack that left it falling back to the lower band of VWAP. It would bounce back, but would be unable to break past 204. Once it reached 201, GameStop started bouncing back stronger, breaking over the VWAP twice. However, because it would be unable to consolidate above it, GME ended up falling back down and retesting 204.48. After some volatility, especially during the last minutes of normal trading hours, GME closed at 202.01, below the VWAP. As for tomorrow, GameStop will find support at 201, 198 and 194. Resistance will be met at 204, 208 and 212. Though we finished the day green, the pattern and general weakness GME experienced does not leave me confident that it will continue moving up. In fact, the stock is currently in a descending triangle. Once that seems intended on sending GME back down to 194 at some point if it does break support at 201. Take the hit with grace if it comes, because shorters are in full control of the daily now, but not the endgame. And that is all I have for you guys today. Let me know what you thought of the video down in the comments below as well. I will link today's morning video down in the comments as well for all to watch if you missed it. Remember to watch the morning video if you missed it. If you want to support this channel, I have a Patreon link in the description as well as some one-time donation links for Cash App and PayPal. Thank you again for being a part of this channel. I will continue striving for better content. Enjoy the rest of your day and to the moon.